Good morning. This is Barry Knapp with Ironsides Macroeconomics. It's Monday morning, March 10th at 7:20 Mountain Time. Our note this week was titled Addiction. I'll begin quickly with the way Copilot summarized our 3,000 word, uh, 12 charts and table note, and I thought it was pretty good, so I'm going to repeat it. It said this week's note, following 3 days of meetings in New York City, focuses on the impact of government spending, tariffs, and labor market conditions. We begin with an assertion that a Fed policy pivot is more probable than a change of policy from the Trump administration, and Chair Powell was not swayed by Friday's weak, unequivocally weak, that's me adding a little extra verbiage here, report. In short, the growth scare is likely to persist. That, of course, has been our theme for several weeks now. The title Addiction was, in essence, Friday morning's lengthy Squawk Box interview with Treasury Secretary Bessent had echoes of our own interview on Tuesday morning, where we described what we've been talking about for several weeks now, which is this adjustment from industrial policy to private sector investment. The way Treasury Secretary Bessent described it, again, we thought was really funny and spot on, which was to say the economy is going, is trying to get off its addiction to government spending and is likely to go through a detox period. So that was almost the title of our note, was detox, but we decided to go with addiction because so many people kept talking about detox for the balance of the day. So we discussed that, and this idea about policy puts is we do think the Fed is going to be cutting by May, and the March employment report will be even weaker than the February employment report. But the Trump administration is all in on the policies that they think are going to ultimately rebalance growth. And we think the Fed needs to participate in this as well, which is cutting short-term rates, allowing QT to continue, and eventually that'll facilitate or will get an extension of duration by Treasury Secretary Bessent in their issuance. But what's really happening here, in our opinion, that we were at a conference last week and there was all this discussion about tariff policy. That's all that's being discussed on financial TV all day. Is the Trump administration, one of their real talents, and President Trump's real talents, is to get people focused on this bright shiny object over here, which is trade policy and DOGE, while the real work goes on in the House to cut government spending or get it on a path to return to 20% of GDP from its current 24 to 25% trajectory. And so that's the much more important impact on the economy, is going to be this cut to government spending. We go through the math on that in our note. Be a full subscriber and you can see all that. But that, we think, is what's really happening. Make no mistake, that was a very weak labor market report. Chair Powell's either, only analyzing it superficially, being a little disingenuous, or just needs two reports to change the Fed's narrative about this. But the increase in the U6 underemployment rate from 7.5 to 8%, if we have to choose one number out of that report, was really a significant uptick. The total hours worked measure, aggregate hours index, is in essence pointing towards 1.2% GDP so far this quarter. That's pretty weak. It's not as weak as this Atlanta Fed wage GDP Now series, but make no mistake, growth is quite tepid here. So that's where we're at. We do not think we're anywhere close to going through this entire detox period. We've gotten about an 8% decline in the equity market. We penciled in 10 to 12, but the timing isn't quite right for the markets to bottom yet. And if you're going to add any exposure, we'd be adding to financials and energy. What we think happened last week was not people racing for safety by buying staples in healthcare. It was just a reversal of all the policy-related trades from the broad Trump trade theme. So that's it for me. Again, consider becoming a full subscriber and you can get a lot more details about all this. And you'll be basically privy to some of these big shifts that you see from us capturing this whole growth scare before it got started. Barry Knapp from Ironsides. Have a good week, everyone. Thank you.